Wall Street's panic over AI? It's gone completely off the rails, and it's given us one of the absolute weirdest market stories I think you'll ever hear. And I know this is going to sound made up, but get this. In February, a karaoke company managed to crash the stock market over AI fears. Yeah, you heard that right. A press release from a company that used to sell singing machines sent a whole chunk of the global economy into a total nosedive. So, how is that even possible? That's the big question we're going to tackle in this explainer. We're going to break down exactly how this went down, what it tells us about the real fears driving the market right now, and, this is the most important part, what all this chaos actually means for you and your career. All right, first up, the karaoke anomaly. Let's dig into the company at the heart of this whole wild story. Okay, the company is called Algorithm Holdings, but check this out. It used to be called the Singing Machine Company. Seriously, we're talking about a company with a tiny, tiny market cap, just $6 million. They're not even making money. They posted a net loss of around $3 million. And this is the company that claimed its AI could boost freight volumes by 300 to 400%. It's just wild. And that single press release, that's all it took. And the aftermath? Oh, it was brutal, and it was fast. C.H. Robinson Worldwide, one of the biggest freight brokerages on the planet, saw its stock tank by 24%. The entire trucking index had its worst day since 2020. We're talking billions with a B. Billions of dollars in market cap just, poof, gone. From Dallas all the way to Denmark. And it all happened because of a press release from a karaoke company. Just let that sink in. But here's the thing. This wasn't some random one-off event. It wasn't a fluke. The karaoke company mess was actually just the explosive finale to a panic that had been spreading like a virus for 10 solid days. I mean, look at this timeline. This thing just jumped from one sector to the next like wildfire. It started on February 2nd with a sell-off in software they're calling the SaaS apocalypse. Then, boom, a couple of days later, it's in private credit, hitting giants like KKR and Blackstone. The next day, it's insurance brokers. Day 6, wealth management stocks are falling. Day 8, it's real estate services. And finally, on day 10, the karaoke company comes along and just wallops the logistics industry. It was a full-blown contagion, all kicked off by different AI headlines. And this quote from a trader at Jefferies just nails it. He said, for every corner of the market right now, there is an aggressive shoot first, ask questions later for any area where there's an AI headline. That's what traders are calling the AI scare trade. It's not about thinking, it's about pure, raw panic. Sell everything first, figure it out later. I mean, what a terrifying way to manage billions of dollars, right? So, what is really going on under the hood here? Well, the best way to think about it is that Wall Street has developed a kind of autoimmune disorder. Where the body's immune system starts attacking itself? That's what's happening. Its whole system for pricing risk is broken. It's attacking perfectly healthy companies because it can't tell the difference between a real threat and a ghost. There's actually a financial concept for this. It's called reflexivity, and it's a bit of a mind bender, but it basically works like this. The market's expectations don't just reflect reality, they can actually create it. So think about it. If a bunch of people suddenly decide a totally healthy company is in trouble, what do? They sell the stock. The stock price crashes. Now that company can't get a loan, top talent doesn't want to work there, and all of a sudden the company actually is in trouble. The fear literally created the thing it was afraid of. And this thing spirals into a really nasty, self-fulfilling prophecy. Here's how it goes. Step 1, some scary AI headline pops up. Step 2, boom, massive stock drop. Step 3, inside the company, it's total chaos. Emergency board meetings, internal panic, which leads to step 4, really, really bad strategic decisions. They slam the brakes on hiring, they slash budgets, they rip up their entire roadmap, all just to try and calm down a market that's completely lost its mind. And you want to hear the real kicker? The ultimate irony in all this? The result of all this panic, this defensive crouch, is that it makes these companies weaker. It actually makes them more vulnerable to being disrupted by real AI in the future. It's like the damage from the body's over-the-top immune response ends up being way worse than the actual disease. Okay, so let's be super clear here. The market isn't totally crazy. AI is going to be disruptive, for sure. The problem is that the market is being catastrophically clumsy about it. It's basically using a sledgehammer to kill a fly. It's treating every single AI risk as if it's exactly the same. When you actually break it down, there are at least 3 totally different kinds of AI risk. First, you've got genuine, here and now displacement. Think about some software companies with per-seat pricing. For them, the threat is real, and the market's reaction is, well, it's mostly correct. But then you get to category 2, medium-term risk. This is stuff like wealth management or insurance. Here, the market's reaction is just an overblown panic. And then there's category 3, where the market is totally mispricing the risk. We're talking logistics, commercial real estate. Honestly, the reaction there is just delusional. So what is the market missing? It's nuance. It's the human element. For those category 2 businesses, their value is built on relationships and trust. AI can't just replace that overnight. And for category 3, the panic completely ignores the deep industry knowledge and, the physical realities of moving stuff around the globe. The market is just ignoring all of that, and that's the fundamental mistake. All right, so we've talked about the market, the panic, the karaoke company. Now let's talk about you, because this is where this whole crazy story becomes incredibly important for your career. This widespread panic is actually creating one of the biggest professional opportunities we've seen in a generation, but only for the people who know how to spot it. Think about it. The logic is really simple. Every single company that just saw its stock get crushed because of an AI headline is now scrambling. They are desperate to have an AI story, an AI strategy, and what does that desperation lead to? It leads directly to new roles, new budgets, and new career paths that, frankly, just didn't exist 6 months ago. And the person who is perfectly positioned to step into this chaos and win is what we can call the domain translator. This is the person who can bridge that massive canyon between the crazy stuff executives are hearing about AI and what the technology can actually do for their specific business today. This is the person who becomes absolutely essential because they can walk into a room full of panic and calmly provide real answers. What this whole scare trade is doing is hitting the fast forward button on a huge split in the job market. On one side, you have process work, synthesizing info, summarizing documents, churning out reports. That stuff is now competing directly with AI. But on the other side, you have judgment work. This is knowing which information matters, understanding context and nuance, and applying real strategic thinking. And that kind of work, it just became more valuable than ever before. And here's the crazy part. The timeline on this is super, super tight. We're talking about the next 90 days. In the next 3 months, companies are going to be making huge decisions about this stuff. And they are actively looking for the people who can step up and help them figure it out, right now. So how do you become that domain translator? Look, it's not about memorizing a bunch of AI buzzwords. It's about getting your hands dirty. Don't just demo AI tools, actually test them on your team's real workflows. Track what works and, just as importantly, where it breaks. You need to be able to quantify the impact. Don't just say it's better. Say this cuts our review time by 40%. Articulate the results with precision and always, always connect the technology back to a specific business problem you're trying to solve. When you step back, what you're seeing with this market panic is really just the tip of the iceberg. Under the surface, there's a massive transfer of career capital taking place. It's flowing away from the people who shrugged and said AI is someone else's problem, and it's flowing directly to those who have been quietly getting prepared. So I'll leave you with this final question to think about. Take a hard look at your own company, your own workplace. Is your company's AI strategy a real investment? Are they genuinely trying to build new capabilities? Or is it all just optics, a show for Wall Street? Because the answer to that question is probably going to define the next 5 years of your career.